Hello, everyone. Thank you for joining us today as you're coming in the webinar room. I want to welcome you. My name is Marche. I'm the webinar director here at Advice Chaser. Before we introduce our guest and get started, I do need to do a little bit of legal housekeeping. Advice Chaser, the host of this webinar, is not a registered investment advisor. We cannot and do not give financial advice. Today's presentation is for educational purposes only and cannot be considered advice for any person's individual situation. Advice Chaser regularly hosts informative webinars such as this one, featuring a variety of knowledgeable professionals, many of whom are licensed advisors. Any opinions, ideas, jokes, or principles expressed by presenters are their own, and however true, funny, or interesting are not endorsed by Advice Chaser. Please do not act on the information you hear today without consulting a qualified financial professional. We're thrilled to bring you this educational presentation today. Just a couple of notes as you come in. You are on mute. Attendees are all muted. But we do encourage you to ask questions using the chat box, and we'll do our best to address those before or after the presentation today as appropriate. With such a large crowd today, if we don't have a chance to get to your question during the presentation today, go ahead and leave your contact information as well in the chat, and we will make sure someone reaches out to you after the event. Again, we want this experience to be as educational as possible, so please don't hesitate to ask for clarification or expansion of the material. I'd like to introduce you to today's presenter. J.R. Gururi is a certified financial planning practitioner that utilizes a unique approach and methodology called financial life planning. Life planning connects the dots between our financial realities and the lives we long to live. This method is based on the premise that advisors should first discover a client's most essential goals in life before formulating a financial plan, so a client's finances fully support those goals. As a lifelong learner, musician, and athlete, JR holds a black belt in Brazilian Jiu-Jitsu, trains Muay Thai, and has been playing the guitar for over 30 years. He actively performs and writes music in his band. And JR, we're so excited to have you here today, and I'm going to go ahead and turn the time over to you.
Thank you so much. Okay, so the idea between Marche and I and Advice Chaser was to come up with a list of questions. Typically, people should be asking a financial planner when we first have a conversation or interview with them. And I kind of started laughing at it because some of the questions I get are a little out of this world. And I want to help people to really hone in on probably the best things to ask in an interview with a financial professional. So when people, I'm just going to read this, because, or you can read it yourselves. There's not, this is kind of what it is. So when people want to interview an advisor, they pull up a list of questions from the internet. So that's where they get their questions from. And I can tell when they get the questions from the internet because they come at me in this sort of format that I'm like, why are they asking in such a weird way? Sometimes they're not the most useful ways to know whether or not you want to work with a certain professional. And I believe that you really should kind of have an understanding of the services that you need to get the job done that you're looking for. And there's a lot of different services out there. And we're going to kind of touch on most of them today. Typically, there are services in one of the ways in which I want to talk about services is there's an institution called the Certified Financial Planner Board, and they are an institution, an educational association that gives people like me knowledge on how to plan out someone's life financially. And there's like 6 main categories, and the 6 main categories are goal planning, insurance planning, investment planning, retirement planning, tax planning, estate planning, right? So these are the main areas of planning that we approach. Also, what's listed on here, right? So do I need a financial plan or not? Is this just a 401k rollover, or should I leave the money where it is at the 401k company? Do I need an IRA, or which type? Is it a Roth? Is it traditional? Do I need to evaluate the investments in my portfolio? Do I need do I need like macroeconomic investing advice, or is it microscopic in nature I need? And I mentioned tax and estate planning. So these are the kinds of things you want to kind of have an idea of what I need when I talk to someone. Okay. Everyone asks me this question. And the question is, what is the average portfolio performance of your clients? And so feel free to ask the question, but I guess use the answer like correctly is what you want to do, right? So first of all, it's a red flag if everybody's dominating the stock market, right? If they're doing better than 7 to 10% per year on average, that's weird, right? Because what it means a lot of different things. Number one is they're probably lying, right? That's not good. Number two, everybody's portfolio is completely different, right? And so the way in which the first step to analyzing the performance of a portfolio is what we call the asset allocation. From a very broad perspective, how much is in stock, how much is in bond? Generally speaking, the bond market's not generating more than 2 to 4 or 5% per year. So right there, we know that's on the low side. So if most of my money's in bonds, I'm not getting very high returns. So therefore, the only way to get higher returns is going to the opposite side, right? It's the stock allocation. And so stocks, there's, 10, 20,000 different stocks to invest in. And so if they're making a lot of money, that means it's very aggressive. And if you're making a lot of money and you're very aggressive, are you supposed to be very aggressive, right? Sometimes yes, sometimes no. Sometimes the world tells you you should be aggressive or not. Like the world meaning like the market environment. So like to ask someone what's the average return of their clients is like, it's like, whoa, there's like, I have retirees that are not aggressive at all. And they probably have the most money, right? Retirees typically have the most money. So they're bringing down my average because they're not aggressive. And then my younger people don't have as much money, but they're super aggressive. And so it messes up the whole thing. So you can see, like, I'm just riffing right now with like my language of like, you can imagine how complicated it is. So the reality is you want this stuff based on where you're at yourself, what your goals are, what your dreams are, what your wishes are, what your appetite for risk is. Those are the things that will determine an average rate of return that you should expect from a market. So,
we do have a question here. So the question
of course we have a question on this slide.
Yeah. So the question is, so at what point do you ask a question about portfolio performance? After you've made a plan?
No. You can ask. You would. So I would love for you to reformulate that question, but like, you want to know what you can expect to earn in a market with your corresponding risk tolerance. That's a perfectly okay question, right? So, but the advisor has to come to you first with the understanding what your risk appetite is. Meaning, like, look, everybody remembers, for most of us, many of us remember 2007 to 2009, right? The stock market lost 53% of its value, generally speaking, 53%. Now, I don't care who you are. When your account drops by 53%, that's a lot. Now, so the question is, how do you handle that? If you handled that down move and went, no big deal, no problem, and you were like, let's buy more, well, then you are a highly aggressive person and can handle high returns and high risk. If you were like, I asked my financial planner to pull me out of the market halfway through that nonsense, then you're not designed to handle high risk. So it's that sort of
yeah, I think that addresses that question. It's, at what point do you ask about portfolio performance on your own potential investments?
Thank you. And I saw there was another question, but we'll get to it.
Yeah, I'm going to hold on this one because we've got a slide coming up. So let's keep going.
Okay. So a lot of times I get the question is, are you a fiduciary? And so this is I think this is kind of a funny question. And I think it's funny. And I mean, it's a serious question, but I sort of chuckle when I hear it, because if you do the research on the question, it sounds good, right? And the reality is of the question, is the person you're talking to, is the financial planner going to put your interests of your future finance ahead of their own? And what does that even mean? What is their own interest? Well, if you look at it from a very, very, from a like a negative perspective, the interest of a person doing business is to generate a profit for themselves, right? So I'm in business, my peers are in business, and so our job in business is, one of the jobs, of course, is to generate an income from working with people, right? And so if a financial planner steers you in a direction that's going to generate more profits and is not as beneficial to you, that's bad, right? And if someone, on the other hand, steers you in a direction that's best for you and they make less money, is it bad for you? No, it's great for you. Is it bad for them? I don't know. It's debatable, right? But the reality is they should be directing what's best for you. And so how I approach this, and how many people who do good work in this industry, is we do what's best for you. That's it. Okay. And so if someone was not going to do what was best for you, right? They're not a good person. And when you ask them the question, are you a fiduciary? They'd probably say, yeah, and would lie to you. So lying is what happens when this question is asked and they don't follow through with it. So, you know, this, and I'm going to talk about this in another slide, but now we'll get to it in the other slide. We'll get to the next slide. So, okay. So how do we know some things about financial planners? Is we got to do our homework as best as we can. Okay. So Broker Check is a website that you go to and you can look up if anyone made a complaint about someone in the process of doing financial planning. Okay. So that's good information. And guess what? Even though somebody, there's the website and you can look up by name and stuff. Okay. But even if someone made a complaint about someone, doesn't mean the person's a bad person. Okay. So you could still work with someone who's got a negative complaint, right? But just know that you got to ask them about it. And if they're truthful about their complaint, it's fine. There's nothing wrong with that. People complain about other people all the time. Doesn't mean the person that's, you know, being attacked is the wrong person, right? But sometimes you see repeated complaints and all of a sudden you're like, wait a second, maybe this isn't somebody I want to work with. So that's good. That's one research tool. Next is referrals. The reason why this is a great way to work with someone is through a referral, because if you get a referral, that means that someone's already had a good relationship with someone. So that's excellent. And then homework, research. You know, there's websites, there's Google searches. And then I was saying to Marche a moment ago, like everybody's carrying around a video camera in their pocket. I mean, you can't get away with anything these days, right? Everybody's filming everything. So, you know, it's most likely you're not going to meet up with like a crook or a thief, but just do a little bit of homework. And then, of course, the conversation unfolds. You can sense this. There's an element of intuition that goes into the process of finding a financial planner. Use your intuition. If they make you feel good, you're probably on the right path, though. But not too good, because if they make you feel too good, maybe they're trying to sell you something. So be careful. All right, next one. All right, how are you? Yeah.
This is probably what we were going to get to, and I do have a question after you go through this information.
Okay, so are you a fiduciary was the slide before. Another way of saying the same question is how you get compensated. How are you paid, Mr. or Mrs. Financial Planner? Because a fiduciary is synonymous with compensation. Let me give you an example. So to create a financial plan for someone, so a plan means set goals, learn about money, execute a strategy to achieve said goal. There's no sale of products there. That's just the person giving advice. And so they will ask for a fee. Typically, it's either hourly, it's on a retainer, It's just one-time fee for the year. That's typical approach to a financial plan, putting a plan together. Okay, so it doesn't matter what products you use. So typically a fiduciary would say, you pay me money and I'm going to give you a plan. And that's sort of like a fiduciary relationship. Okay, so that's sometimes what people mean when they ask the question, are you fiduciary, is how do you get paid? Do I just pay you a fee? Okay. Another way that people get paid is through the process of selling financial products. Now, the selling of financial products is not bad behavior. It's just selling financial products. And they give you the product, you don't pay them anything, but they receive a commission for directing you to some financial institution that's providing a product, and they get paid a commission. Now, that if you need the product or you want the product, wonderful. But if you didn't need the product and didn't want the product, the only way that you can work with them is to use this product. That's not exactly the best situation to be in. And you need to do more homework or discussion with this person to find out, is this person directing me in a certain direction that I don't necessarily need to go in? So that's the problem with commissions, is people tend to steer you in directions that may not be best for you at that moment in time. But it's not that financial products are evil by nature. They're not. They are just financial products, and they all have a good thing that they do, and they all have a bad thing they do. There is no one magical product. So don't believe that there's any one magical product out there. I promise you. Okay, so many financial professionals, this is the last bullet point, can only provide one or two different companies' products. It's because that's the company they work for, and they're hired to do the job, and that's fine. So they will promote one product, even though there's another product that might be better for you out there. Maybe it's a lower price product or a higher return-based product, but they're not going to steer you in the other direction. They can't. That's not their job, right? It's their job is to get you into their product. Now, they can be honest and say there might be a better product out there. That would be nice of them, but they tend to just leave that out. But understand, you just ask them, are you only selling one kind of product? And many times people don't even realize that, yeah, you're only getting one product and you think you're getting the best, and you might not be. There might be better products, but you have to do, again, there's more homework involved. So yeah, that's how I want to discuss that. There's one other method of payment. It's what we call, it's not listed on here, it's called assets under management, and it's very common. So first thing we talked about was fee for a plan. Then there's the commissionable products that we sell to people. And then finally, it's the assets under management. And so it's still a fee. It's generated by the amount of money that somebody's managing. The fee comes off, paid to the financial planner and his team. And that should be either for investment advice, specifically the account that they're managing. It could be for an overall financial planning. They'll bundle it all together. And so that's another way they might do it. And so people do things differently, even with the same products, is what I'm trying to get at. And so you just want them to, I don't know who made up the rules in financial planning, but whoever made up the rules did not do a good job. I promise you, it's very confusing. But if you have someone that really takes the time to explain it all and the nuance, you know you're talking to one of the right people. And it should take time. It's not something you just whip up in 30 seconds and gives you an answer. They should probably lay it out. Unless, of course, they only have one way of doing it. Maybe they just only do it. We do it like this. If you're going to be a part of our client base, you fall into our way. And there's a flip side. You get to be the designer of your financial plan, and someone gives you the freedom to choose how you want to work with someone. There's both kinds of things. So that's good on that side. But you had a question.
Yeah. Can you talk a little bit about how advisors make money when they sell annuities?
Okay, so annuities have changed the way they generate a fee or commission to the planner. It used to be only one way, now it's two. Generally speaking, the sale of an annuity, it's a sales transaction, and it becomes a commissionable product, meaning that you don't pay the advisor for putting your money into annuity. The advisor tells you to put your money into some sort of annuity company. The annuity company pays a commission to the planner for doing it. Okay. That was up until probably within the last year or two. And now they've moved into a sort of more fiduciary role of annuities, where some annuity companies are allowing them to do a fee-based product, not commission. So it's changed. So it's both now. It is both now.
Okay. I have a question here about ideally, if you want to work with an advisor and you have them for a long time, how that factors into having your assets under management, that those fees that come out there, is that generally made profitable to an advisor through that long-term relationship? Is that how that works?
I mean, to me, that's exactly how it works, right? I mean, in my humble opinion, when you hire a financial professional, you're with them for a long time. And so we both want to be in, both of us, the planners, and you, the clients, are both incentivized to work with each other for a long period of time. The way in which you incentivize the financial planner is the asset under management fee. Every year that fee shows up, it comes typically through the investment account. And they love that, the financial planner. On the flip side of that, the financial planner must be doing, really good planning. That you should have a great planning relationship with them. You should probably spend a lot of time analyzing the performance of the portfolio, and over long periods of time, the portfolio tends to go up, right? So that's what happens. So guess what also goes up? The fees associated with that portfolio. So that's why that tends to work. Okay, so another thing that you want to know about a financial professional is their qualifications. There are, I don't know, maybe over 100, maybe 200 different certifications a financial professional can take that are, held in high regard, if you will. So it just depends on what the planner wants to do. Some are more popular than others. I mean, it gets really, really like specific, some of these designations and certifications. Like someone could be an expert in divorce planning. Some could be an expert in special needs children. Some could be good at estate planning, and then there's tax, and then there's retirement plans. So we could get educated to like very, very specific niches, or they could be very broad. Like I talked about the certified financial planner. It's a very broad training course. It's very popular, but it's broad. So you don't become a master at something specific. You're almost like a master at everything, but from a broad perspective, not a microscopic perspective. Right? So they're all different. So what you need to do is when you see somebody has a designation, go to the corresponding website, which is easy to find, right? You just Google it and learn about that designation. What it tells you, what they studied, what they had to do, what experience level they had to have. And then the other thing, of course, is what is somebody's experience? Now, experience is also kind of funky, right? So somebody in the business 20 years, sounds like they got a lot of experience. Yeah, but you could look at it a number of different ways. Some people have 1 year's experience 20 times. That's not good, right? They haven't learned anything, just what they learned the first year. And then, a newbie on the block may not be very experienced, but maybe they got your interest is like you matter to them more than someone who's been around the block 20 times and just can't take it anymore, right? So they will they will do their research and find things out. So newbies are fine too. So there's nothing wrong. Just understand, it's just about honesty. What are they saying in their conversations? I'll tell you, there's some old dogs that just don't want to learn new tricks. I mean, that's reality. So again, that's your job as a consumer, is to do your homework about this person. What is this person about? Yeah. Next slide. Yeah, this is a great question, and often people don't ask this. How often we will meet and what can I expect? Especially with the planning, like if you come to me for an annuity and all you need is annuity, that doesn't last very long. It's like you learn about the annuities, you get them done, you move on. Same thing with insurance. You learn about the insurance, you get the insurance, you move on. But when we're putting a real robust life plan together that incorporates your life goals and your investments and your debts and your budgeting, that takes time, right? And so you're going to need to meet with this person often. And typically when you're doing your first financial plan with someone, you're talking to them a lot over the course of 6 months to a year. It takes a while to get a plan in place, especially if you have a complicated financial situation. But after that, after the first year or two, it becomes more sort of like maintenance. And so you don't meet as often. Typically, I'll meet with people once every 3 months, quarterly. But some people don't answer me, right? And I know this with other financial, but they don't, every once a year, I reach out to them, but that's all they need. But there's a funny thing. There's this thing called life out there, and life throws you these things called curveballs. And I'll tell you something, you get these curveballs, and next thing you know, you're asking your financial planner that you haven't talked to in a while a lot, right? And what are the things that are the curveballs? It's the marriage, it's the children, it's the education conversation for the kids. Like these major life events get you to start talking to financial planners more often. Yeah, and you want to know, are they an in-person type relationship, phone relationship? I mean, I got to be honest, the world changed over the last 3 years. I was mostly in person. Now I'm mostly video conference. And with the technology, video conferencing is fine. You should be fine. I mean, phone calls are good for just like quick little, few questions. And a typical meeting should have an agenda, right? It should have a well thought out conversation. Typically, personally, I don't like meetings going beyond an hour. Anybody has to listen to me talk for over an hour, that's enough, right? I say that even though you want more information, because I've had people say, I want more. No. Take a brain break. Let's do this again next week. But I had some crazy people want to meet with me twice a week, so it does happen. Okay.
We did have a question before we move on here. Does an advisor have to be in your specific state?
No, they don't. They have to be licensed to sell you products and services in that state, but they don't have to be there. So in order to give financial advice and investments, it's through the SEC. You have to be registered with the SEC in certain states. And with like insurance products and annuities and stuff, same thing, you have to be registered. It's just a different governing institution manage that. So, and that, remember that broker check thing that tells you the states in which they where they can do their investment management. So it's on there. Okay, so in my opinion, a financial advisor, right, a financial planner should have a team at their, at their fingertips, at their disposal. Sometimes they should even manage that team, because like a financial plan, when we're talking planning, you have to manage all different aspects of a person's life, right? And so this person needs to be in clear communication with your attorneys, with your CPAs, your insurance professionals, and so on. They don't have to be the leader of the team. Sometimes I've been sort of like the sidekick, where the lawyer was running the show, or the CPA was running the show, and I was just brought in for my expertise in one of my specific fields. But a team is important. And if you don't have a team, ask the advisor about their team. Do you have CPAs you can refer me to? And that's a big one I get a lot, a CPA. So yeah, that's important.
And I do know that attorneys and CPAs have to, I'm not so sure about CPAs. I know attorneys have to be licensed and, with their state.
That's
so
right.
you can't go to an attorney that's out of state. Let's move on to this one. This is a great question.
Oh yeah. So what is your investment? What's your investment philosophy? So there's some great financial planning tools out there. And the way in which they get to the same answer is different. For instance, I know that there's something called a goal-based financial planning software. And what does that mean? You create your goals. That's where you start and say, I want to retire one day. I want a vacation. And I want to make sure I want to buy a house. I want to put my kid through college, right? So these are the big life goals. And that goes as step one of the process. And what you do is you tell the program to how much money you got, how much you're saving, and what kind of asset classes you're saving in. And it says, here's the probability of you achieving that goal without running out of money. That is a goal-based system. Now there's another one. There's what we call a cash flow system, where it says it's the opposite. Is you have this much money, you're saving this much money. What are you going to have in the future? What could you possibly achieve? Right. So that's a cash flow system. So stock allocations are important. Are we talking about growth? Are we talking about asset preservation? This is great. Like this is someone who's in like their later years, right? Some things you need to preserve assets either to live off of or pass to your loved ones. And like all of this matters. Like your goals matter, your risk appetite matters, the different investment strategies you utilize matter. Everything matters when deciding on the investment philosophy. And everybody's just customized. And for me, everyone's different. Everybody's different. Everybody's financial plan is completely different from somebody else's. From their investment strategy to their risk tolerance, it's all different. So it's very, very customized. I think it should be.
So can you rephrase this, and instead of saying what's your investing philosophy, what it would be another way to say that's not maybe so internet question based?
I would start with, and what I'm doing so far, is that going to be the thing necessary to get me to achieve my goals? That's the first question I would say. And most likely the answer is no.
Yeah.
Because we tend to have much bigger goals than what we're prepared to save for, right? I mean, that's just sort of the American way, right? And so what changes can I make in my investment philosophy to achieve those goals? Do I need to save more money? Do I got to budget better? Got to pay off debts? Should I be more aggressive in my portfolio strategy? Should I be less aggressive? That kind of thing. It's almost go backwards with it, right?
Mm-hmm.
Yeah. Okay, so this is important too, and this is when we talk to people about what we're trying to achieve, we tend to like to work with people who are like us, right? That's very common. And what I found is certain types of people I work better with than others because of the language I use and the mindset I have about life, right? My perspective on life puts me in a certain bucket of people that just, when I talk to them and they talk to me, it just flows. It's like we've been friends for years, right? That means something. And when you have a conversation with somebody, look for that. Are they speaking my language, right? And so people in my world, what they do is they tend to focus in an area, right? I only work with business owners, or I only work with medical professionals, or I only work with pilots, because they know something about those people. They work with those people, or they have an affinity to that world. So look for that, right? And a lot of times you'll get referred into those people, right? That's typically what happens. So you're in the same business as someone, they're working on an advisor, and they just keep going to the same person because they speak the language, and that's common. Another thing that people have questions about is it okay with working with someone in a different demographic? And the answer is, generally speaking, it's yes, but there's pros and cons to all of it, right? So, I'm in my 40s, I'll be honest, and I have retirees and I have pre-retirees. So these are people that are like in their 60s and 70s that work with me, right? So I'm sure many of them were not excited about working with someone, 20, 30 years younger than them, right? And so that's a negative because I've never been retired. So I can't explain what it's like to be retired. They can. Now I'm experiencing it through them, but it's not me, right? I'm just hearing about it. But at the same time, there's a high probability if I don't go anywhere and I don't leave the planet soon, that I'm going to be with them through that whole retirement, as opposed to somebody who's 20, 30 years older than them, right? So there's a pro and con. So, it's okay to work with people in different demographics. Just, again, it's about this honesty thing. I love that. Like, can you have an honest conversation with your financial planner and yourself? And, if they come at you with honesty and it sounds right, then go with it. But if it doesn't sound right, remember, use your belly, use your intuition. It's usually pretty good. And then, of course, some professionals like me go very, very specific. Like they only work with divorcees, or they only work with special needs families. And so those are great. But that doesn't mean someone who doesn't do that, 1,000 times a year is not appropriate. Because I've been in all of these situations. Every one of these people on this list, I know some of them I'm really good at and some of them I'm not. But I was able to get the information they needed, right? And I did my homework. And remember, a lot of the things that we get in financial planning, we need other professionals. We need other lawyers, we need other CPAs. And so they're also a part of financial planning is a team-based, it's a team-based activity, in my opinion. So that just because one person isn't utmost, isn't, like an expert in special needs, doesn't mean they can't get the job done too. So I want that to be clear. Yeah. Okay, the minimum thing. A lot of people ask you that if you have any minimums. So many do and many don't. Just if they have a minimum, it tells you something, right? And it's not a bad thing, nor is it a good thing. It's just what is, right? That means that they have minimums because they tend to focus on investable assets, like stock and bond market assets, because that's how they get compensated. And so they accept minimums because they accept a minimum amount of, compensation for the work that they're going to do. If you don't have the amount of money to compensate them, they can't work with you, right? And that happens, right? People have been in the business a long time. Somebody who's brand new starting out just doesn't fit into their expertise. Okay, so it's a good question. Yeah, others work with certain income levels. Some people look at not so much how much money you have, but how much money you make, which is another approach and a way that they do it. Yes, and different types of advisors, different times of life. Yeah, so there are people that only work with retirees, right? There are people that only work with people just starting out in their career. I know people that work directly with like doctors coming out of their residency program. Like that's all they talk to, right? And so everybody's got a different approach, and you just ask them about it, and they'll tell you. They even brand and market their business to specific groups. Yeah. All right, so this is another important slide. So do I feel comfortable talking to this advisor? So a financial professional, when you meet them, should make you feel very comfortable in the first 15 to 20 minutes of talking freely about your financial situation. If they're literally screaming at you about their practice for the first 20 minutes, you might want to take a step back, right? It should be a space to feel really comfortable talking. Now, a financial professional should make you feel a little bit uncomfortable when you first talk to them. Why? Because they know a lot about money, and you know that you probably don't know as much as they do, and you're probably uncomfortable with the reality of your financial situation. But do you have the space to tell them the truth? And if you do, now you know you're on the right track. Do they respect my learning curve? This is huge, right? In my opinion, a financial professional's job is to not tell you what to do. It's to educate you enough so that you can make the decisions for yourself, and they're just some sort of conduit to help you get there, right? So do they respect your ability to learn? Are they genuinely interested in me? So like, you can tell if somebody's interested in you if they're asking you questions about you, not only asking you questions about your money, right? There's a difference between your money and there's a difference between you. If they're interested in you, they want to learn about your life. If they're interested only in your money and they're only talking dollars and cents, just be careful, right? I'd rather have someone listen to me and then the money second. And that's what it says there, have they actually listened to me? And, look for cues. So for clues, excuse me, like, do they listen? And when they're listening, are they making eye contact? Are they silent? Are they talking over you? Are they interrupting you? You need to pay attention to these things. Do they stay silent? Do they summarize what you said to make sure that you heard them, that they heard you clearly? Right? That's really important if they do that. And then work towards finding out an answer or a solution to the things that you're discussing and talking about. To me, if you can see that behavior in the first 45 minutes of a conversation, and that's on repeat, and you're dealing with someone that really cares about others. And that's our business. Most of the people, I would say, I hope it's 90% or 95% of the people who got into this business doing what I do have this, like, I want to help people. I want to make a difference in someone else's life. And so you should feel confident. So, yeah, I believe it.
All
We
right.
got another advisor on the list here. So,
all right, we'll go ahead and address that in a bit. We have a couple of questions here, and there was a question that maybe I can answer. They said, is there an algorithm out there for a customer to find the right financial advisor for them specifically?
Yes, I know the answer to that. It's Advice Chaser.
Well, we're not an algorithm. We're a company that specializes
kidding.
in matching advisors to customers, and it is free to the client. I will say that, there's if you do your research, you're going to find a lot of advisors out there. But Advice Chaser, that's how we serve the.
Well, can I answer the question now?
Yeah, go ahead.
So there is an algorithm out there, and the algorithm is it's Google based, if I may say so, meaning like you type in search for financial planner on some sort of search engine, and whoever goes to the top is the one who did the most work to get to the top, right? So they either pay for it, they use like special code or something. So yeah. So, are you getting the best planner, or are you getting the best planner that figured out how to use search engine optimization the best? So there's a distinction there, right? So there is an algorithm. I just don't know if it's going to get you what you're looking for.
Yeah. So I will read this comment just from another advisor. I agree that we get some wild questions or no questions at all because they aren't sure of what to ask. And that brings up a thought, what if you have a client who comes in who doesn't know what to ask? What kind of questions are you asking them to get to what they need?
Well, I mean, generally speaking, you got to ask them why they're here. Right? Why are you here? What brought you here today? And like one of the questions I heard I thought was fantastic was, imagine you're walking into a room with someone who is totally in tune with who you are and what you're about, and has the complete financial knowledge necessary to make a difference in your life financially. When you show up to the conversation, they ask, why did you come? What do you say? I mean, think about that, ponder that for a moment, right? And so that's a deep question, and that's kind of how you want to approach it, right? People have an idea what they want. You just got to give them the confidence to share.
Yeah. All right. Here's a good question. What's the difference between a CPA and a financial advisor?
Okay. CPA, certified public accountant, is, generally speaking, the main role is to help you not reduce your time, but it's to plan out your taxes for the year that just passed. So they work backwards in life. You did something up until December 31st, and by April 15th of that following year, they help you manage the amount of money you paid in taxes, okay? They can give some advice on how to avoid future taxes by putting money into different financial products and services. But that tends to be their wheelhouse. They also tend to have some good, for business owners, are very good at doing bookkeeping. Yeah, I mean, that's kind of what they do. Where financial professionals take a little bit more time, financial advisors or financial planners spend the time in the world of listening to your goals, helping you formulate an investment strategy, achieve those goals, helping you reduce debt, and helping you, and helping you get the proper insurances in place and investment strategies. I mentioned that already, and budgeting.
All right. So I had several questions come in. I'm going to say, is it the norm today to use a software product to evaluate your needs, especially closer as you get closer to retirement?
A software product? So software?
Yeah.
I recommend using both software and human beings. Softwares are great from a numbers perspective, but human beings add, like how life really unfolds, because life doesn't unfold the way a calculator unfolds it. And I promise you that every dollar that you made an assumption on about something in the future is not the dollar it became, right? So everything is typically, and so you need a human being to help manage the calculations, if you will. But softwares are powerful tools. I use a ton of software programs in my practice, like 8 to 10 different ones for all different kinds of reasons. So that you want to use them as best as you can. Yeah, and there's free ones too. So it's not like you have to use mine.
Here's a good question. Do you need both a CPA and a financial planner if you're not a business owner?
Yes, I think so. I mean, you don't have to do anything. You can do your own taxes and you can manage your own finances, right? So do it. If you're good at it and if you're interested in this stuff, do it yourself. There's no reason to pay somebody because I'm no genius. I'm interested in these things. So there's been thousands of books written on these subject matter. Do your research, figure it out, and it's not that hard. Okay. But if you want to live your life, and not worry about money, and you have things to do, right? Then hire someone. There's nothing wrong with paying someone money to do something for you so you could live the rest of your life without having to worry about it. And that's what I want for people. Like I want them to never have to worry about their money again. Like, let this guy handle it.
All right. There was another question. What's the difference between an advisor from, say, the 401k company and one not connected with that company?
Okay, so you are paying a 401k company through your work money to provide you a service only on your 401k. That is it. Now, they typically don't call you every 3 months, and they typically don't call you once a year and say, how are you doing on your finances, right? They don't do that. So, but you are paying them sort of in a way to provide you a service, okay? And so the only way you're going to get that service is you call them up and ask them about your account, and they're probably only allowed to comment on your account. That's about it. So when you hire someone outside of your 401k company, you're getting, I hope, a way more robust and, like holistic, well-rounded financial plan about everything going on in your life. A 401k is a financial product like an annuity, like an insurance product. It's just a product. And you only have one more, and they only serve one purpose. So there's more than that. And so that's why you might want to consider having other outside counsel around your finances besides the 401k company. Not to say that there's not great people at 401k companies doing great work.
All right. We had a couple questions come in. I'll go ahead and answer this one. Can we watch this on demand by any chance? We will be posting the recording of this video on our website. And we will also send you a replay of this event. That email goes out the day after the event. So yes, that will be available. Here's another question. Do financial advisors typically provide free consultations?
Yes, they typically do. They typically allow you to kind of spend an hour with them going over your situation. They may stop it there after the hour, and the next one might require payment. Some will do 3 or 4 different meetings with you before you sign on with them. just because you might have a way more complicated situation and just there's a lot to discuss, right? So yeah, most people start off with a free consultation, but I am aware that there are some that, you got to pay money just to talk to them for an hour. So that does exist, but most do a free complimentary consultation.
All right, that's about all the time we have for questions today. JR, are there any final thoughts you want to give about this topic today?
I think I've said it before. Ask a lot of questions. Be confident. Don't attack the financial planner either. They don't need to be attacked viciously about themselves and their practice. And also use your intuition, right? So use your intuition, ask good questions, really, and then do your own personal homework before you go meet with someone. Know what you're looking for. And if you don't know what you're looking for, just say it. Say, I don't know what I'm looking for, and I've heard some things. Here's the things I've heard. Let me do it. Can I take a few minutes to tell you about what I'm looking for? And a good person is just going to let you feel comfortable and tell them what you need. So yeah.
All right, as we're wrapping up here, I do want to say thank you to our attendees. We're still getting some more questions in. Go ahead and put those questions in. I will save the chat and we'll try to address those as soon as we can. Again, to our attendees, thank you for attending. And we will be sending out a link to the replay of this event. And you're welcome to share that replay with your friends and family. I want to also thank JR for being here and for providing such a well-rounded, I think, a discussion about these kind of questions. We know lots of people need this information and may be nervous about approaching this topic. Here at Advice Chaser, we're all about helping you find a financial advisor who's a great fit for your life and your financial questions. Our matching service is free to you, and every one of our advisor partners has committed to offer a free initial consultation to anyone we introduce them to. Find out more by going to advicechaser.com and clicking on the link to find an advisor. Once again, from Advice Chaser, thank you so much for coming, and we will see you at another webinar soon. Goodbye, everyone.